Imagine standing at the edge of a vast ocean. You're holding a small, delicate fishing rod, gazing towards the horizon. The waves crash gently, and you're filled with anticipation. Trading is a lot like fishing in that expansive sea. It's vast, a bit intimidating, yet filled with potential. Today we're going to dip our toes into this ocean and explore what it means to begin trading. Let's start with a story, my first dive into trading. I remember sitting in front of my computer, feeling a mix of excitement and nerves. I had just opened my first trading account. It felt like having a ticket to an exclusive club where fortunes were made and lost. It was thrilling yet terrifying. The fear of losing money danced with the dream of making it big. This emotional cocktail is something every trader has tasted. You're not alone in that feeling. Trading, at its core, is about buying and selling financial instruments like stocks, bonds, or currencies. It's a way to capitalize on short-term market movements. Now, you might wonder, why trading? Why not just invest long-term? Well, trading offers the potential for quicker returns, but it also comes with more risks. It's like comparing a sprint to a marathon. Both are races, but they require different strategies and mindsets. As a beginner, the first thing to understand is that the financial market is driven by emotions, fear and greed being the most powerful. Picture the market like a pendulum. When it swings too far one way, driven by greed, it eventually swings back, often too far the other way, driven by fear. Knowing this helps you avoid getting caught up in the frenzy. When everyone else is buying, that's usually when prices are highest, and when they're selling, that's often when you could find a bargain. One crucial concept to grasp is risk management. Think of it as your life jacket in this vast ocean. Without it, even the best traders can sink. When you trade, you're essentially putting your money at risk in the hopes of making more. But hope isn't a strategy. You need a plan, a way to manage and limit your losses while maximizing your gains. This is where the idea of stop loss comes in, a predetermined point at which you'll sell a losing trade to prevent further loss. It's an emotional safety net too, allowing you to act rationally rather than emotionally. Let's talk about a powerful tool, the mental model of probabilities. Trading is not about certainties, but about managing probabilities and possibilities. Imagine tossing a coin. You know there's a 50% chance it lands heads up. In trading, each trade is a new flip of the coin, with no guarantee of success. It's essential to approach it with that mindset, accepting that not every trade will be a winner, but over time, with a good strategy, you can tilt the odds in your favor. The markets are also a mirror reflecting the psychology of its participants. This is where the study of market psychology becomes invaluable. Herd behavior often leads people to make irrational decisions. It's easy to join the crowd during euphoric highs or panic during market crashes. But remember, successful traders often go against the herd, buying when others are fearful and selling when others are greedy. Now, let's consider the impact of time. Trading can be consuming, with every tick of the market drawing you in. Yet it's important to step back and not let it take over your time. Balancing trading with other aspects of life can actually make you a better trader. It helps keep emotions in check and decisions clear. A practical tip from my own experience: start small. When you begin trading, it's tempting to jump in with a lot of capital, thinking the more you risk, the more you might gain. But starting small gives you the freedom to learn without the burden of large losses. Think of it as practicing on a small pond before heading into the ocean. Remember, trading is as much about knowing yourself as it is about knowing the market. Self-awareness is critical. Recognize your emotional triggers and biases. Maybe you get overly optimistic after a win or overly pessimistic after a loss. Spotting these patterns helps you stay grounded. In the end, trading is a journey, not a destination. Think of it like a lifelong learning process. Each trade is a lesson, whether it's a win or a loss. The key is to keep learning and adapting. Trading won't make you wealthy overnight. It takes time, effort, and patience. It's not about getting rich quick, but building a solid foundation for long-term wealth. As you stand at the edge of this ocean, rod in hand, remember that the goal isn't just to catch fish, but to enjoy the process of learning how to fish. Trading can be one of the most rewarding experiences when approached with the right mindset and tools. So, take that step, cast your line, and embrace the journey with curiosity and caution. Reflect on this. Every seasoned trader was once a beginner, standing at the shoreline with little more than hope and determination. Let that thought carry you forward as you embark on this exciting new chapter.